So welcome everybody. Good morning. Thank you for joining Accountancy Europe and EFRAG for this webinar that is titled Supporting High Quality ESRS Implementation. My name is Mark Vaassen. I'm the President of Accountancy Europe. So today we will discuss the implementation of the European Sustainability Reporting Standards, or the ESRS. You will hear that abbreviation quite frequently today in the webinar. So we have a representative from the companies, the preparers, the accounting profession, and also EFRAG, and they will all share practical perspectives on the ESRSs, as well as views on the two pieces of implementation guidance that EFRAG will soon issue for consultation. As you know, the ESRSs will be effective from the 1st of January 2024, and they will serve as a basis for the preparation of a sustainability statement for the first set of companies in the scope of the Corporate Sustainability Reporting Directive. Now, the ESRSs are aiming at harmonizing the sustainability reporting practices in Europe, but as with everything new, they still raise a number of practical questions and issues of interpretation. And we aim to address some of the most recurring questions in our webinar today. This webinar is live and the recording will be available after the webinar. And you as the audience may ask questions at any time throughout the webinar by submitting them to us on Slido. And the QR code to send questions will be visible on the next slides. Now, we may not have time to answer all of the questions that are coming in, but we do our best to cover as many as possible. And if yours is not answered, we hope that you will understand. So without further ado, I'm going to introduce the first speaker, and that's the European Commission. Let's start with Tom Dodd, who is the team leader of sustainability reporting at the Commission. Tom, over to you. The floor is yours.
Thank you, Mark. Thank you. Good morning, everybody. And thank you more generally to Accountancy Europe and EFRAG for hosting the event that you are doing this morning. I'll provide a 10-minute or so overview of where we are and what comes next from the Commission's perspective. Mark, you've already pointed out that the first set of ESRS, European Sustainability Reporting Standards, have been adopted. They were adopted in July, and they have a phased-in entry into application, as you mentioned, over the next few years, with the first set of companies applying the standards through financial year 2024. The ESRS are both a major achievement and a major challenge. They are a major achievement because the EU is the first jurisdiction to have a comprehensive set of mandatory sustainability reporting standards. Those standards are consistent with the ambition of ultimately putting sustainability reporting on the same footing as financial reporting. And more broadly, they are consistent with the ambitions of the European Green Deal. Now, the standards are a challenge to some extent, if you'll allow me, almost for the same reasons. They are a challenge because they are comprehensive. They are a challenge because they are commensurate with the ambitions of the European Green Deal. And they do, of course, now need to be implemented relatively quickly. Let's not forget that before their final adoption, the standards went through many iterations. The constant objective along the journey has been to balance the need to limit unnecessary reporting burden on companies with the need to meet policy objectives and to meet the legitimate information needs of users. EFRAG itself substantially reduced the volume of ESRS after its first major public consultation on the drafts, and we in the Commission made further substantial modifications before adopting the final version of the standards in July. We've also proposed to increase the thresholds, the monetary thresholds that are used for defining who is and who isn't a large company, and therefore which companies have to report under this piece of legislation. We have to do that in any case periodically in order to account for the effects of inflation, but the immediate effect in this case would be to take something like 14% of the companies that might have been under CSR scope out of the CSRD scope. That decision to change the thresholds is still pending the no objection from both the European Parliament and the Council, the member states. I was asked very recently by a representative of a major oil company whether the Commission had any regrets with regard to ESRS. It occurs to me now that the best reason for regret might be that we didn't start 10 or 15 years earlier. That would have given everyone, companies, standard setters, assurers, enforcers, much more time to learn what we need to do. It might have also provided for a slightly more phased introduction of some of these rules. But the sad truth is we didn't start 10 or 15 years ago for a number of different reasons that we won't go into now, but we do not now have the luxury of time. So our focus has to be on rapid implementation and efficient and effective implementation. And to that end, we have asked EFRAG to focus on practical implementation support for companies. And I think Patrick will talk about this more, and indeed it's the focus of much of today's seminar. In essence, that support from EFRAG will take the form of specific implementation guidance on particular themes, as well as the establishment already done of a question and answer, an online question and answer facility through which companies and others can submit questions. We, on our side, don't think that we can underestimate the importance of this kind of support in terms of facilitating the correct implementation of ESRS. So we are also looking at other ways, if we can, to help further accelerate and broaden that support. From our side in the Commission, we are also working on a series of questions and answers that we hope to publish as soon as possible next year. Those will be primarily on interpretation of the directive itself, on the interpretation of the CSRD, rather than specifically interpretation questions on the standards as such. Now, beyond implementation support, 6 items briefly to flag from our side in terms of what is coming up and what the next priorities are. Firstly, SME standards. There'll be 2 sets of SME standards, one for use by listed SMEs to meet their legal requirements under the CSRD, and then a separate set of standards which are simpler still, if you like, which would be for voluntary use by non-listed SMEs, which are, of course, the huge majority of SMEs in Europe. We hope that EFRAG will be able to submit draft standards to the Commission by November next year, and then in 2025, the Commission would respectively adopt and publish those standards. Secondly, digital taxonomy. For the sake of clarity, we use the term here taxonomy to mean the digital classification system, not to be confused in this context with the sustainable finance taxonomy as such. The CSRD requires companies to tag their reported information according to a digital taxonomy. EFRAG is working on that digital taxonomy, and then ESMA, the European Securities and Markets Authority, will have to play a role, and we expect to adopt that digital taxonomy sometime during the course of 2025. That is our best working assumption at the moment. I think it goes without saying, but for the sake of clarity, until the Commission has adopted the digital taxonomy, companies won't be able to digitally tag the reported information. Thirdly, sector standards. Again, the directive, the CSRD, requires the Commission to adopt a first set of sector standards, in fact, by June next year. Now, we have made a proposal to the European Parliament and to the Council to postpone that deadline by 2 years. The logic is really twofold. Firstly, to give companies more time to breathe and to focus on the correct implementation of the standards that have already been adopted before we come up with new standards. The second part of the logic, equally important in many ways, is to ensure that EFRAG has the necessary time and resources to be able to dedicate to the provision of implementation support and the development of SME standards, which are our two major priorities for the moment. In fourth place, standards for non-EU companies. So according to the CSRD, there will be separate standards for non-EU companies that come under scope because they generate over 150 million euros on the EU market, even if they're not legally established in the EU. Those standards would essentially be for impact materiality only. And again, the directive says that they should be adopted by June next year. So we have also made a proposal, in fact, the same proposal, to the Council and to the Parliament to postpone that deadline also by 2 years to June 2026. And the thinking here again is to free up time in EFRAG for other priorities. I think it's important to point out that this wouldn't change the date of application of those standards by the non-EU companies concerned. The directive sets that date as financial year 2028, and that wouldn't change, and we are not proposing to change that date. The fifth point I wanted to mention briefly is the importance of ongoing interaction with global standard setters. That's particularly the Global Reporting Initiative and the International Sustainability Standards Board. We want to and need to ensure that we continue to have a very high degree of interoperability between mandatory ESRS and the standards that exist at global level. Our primary aim really is to make sure that EU companies who are required to report according to ESRS would not face significant additional burden or problems if they were to decide also to report against ISSB and or GRI standards. Lastly, and I think it's appropriate to mention this, although perhaps slightly out of the scope of your webinar today, but the development of EU sustainability assurance standards. These are also required by the CSRD. At the moment, we are following very closely the development of draft standards at global level by the IAASB, in the hope that they, to a reasonably large extent, will be consistent with Europe's needs in terms of sustainability assurance standards. We must, in any case, adopt European sustainability assurance standards by 2026. I think the deadline is set for October 2026, if I'm not mistaken. So we will have to see in due course how far we can build on the basis that emerges from the work of the IAASB. I think that brings you up to date from the perspective of the European Commission, and I hope it helps to provide a reasonable framing for the rest of today's discussion.
Well, thank you very much, Tom, for that and for sharing the Commission's perspectives on this. I think all the 5 points that you mentioned are highly relevant, including the assurance bit, because we will actually be discussing that also in our panel later. So thank you for that overview. Next, we will actually go to Patrick de Cambour. As you know, Patrick is the chair of the Sustainability Reporting Board at EFRAG, responsible for the development of the ESRSs and also responsible for issuing implementation guidance. And Patrick, you will share EFRAG's efforts in supporting the implementation of the ESRSs, and probably will also talk briefly about 2 pieces of implementation guidance that you will be issuing soon. So without further ado, Patrick, I hand the floor to you. And again, Tom, thank you for your overview. Patrick.
Thank you, Mark, and good morning to all. EFRAG is very happy to co-organize this event about the challenges of implementation. Indeed, as mentioned by Tom Dodd, the adoption of the ESRS, of the first set of ESRS, the sector-agnostic ESRS, is a milestone moment. But, you know, this is only the beginning of the story, because now we need to, many companies need to implement, and we are very conscious at EFRAG level that this is challenging, because I think it can be compared to the move that was done at the beginning of the years 2000 to move to IFRS to a certain extent, maybe less so, but nevertheless a significant effort. So I will focus on the implementation support that EFRAG is trying to propose to preparers and users to make this easier and to make sure that implementation is a success. Next slide, and then the one after that, if I may. Yes, please. Can you move? Yeah. So I will explain what we are producing in terms of implementation guidance. Also explain the Q&A platform that is available, that has been available since the end of October, and maybe give a few information about interoperability, which is very dear to our heart, to avoid multiple reports. Next slide, please. So we now have created, no, please, well, yeah, thank you. We have created a new category of documents which are prepared by EFRAG, which is called implementation guidance, IG in short. And let me highlight that this implementation guidance is by definition a non-authoritative document, which is issued by EFRAG under its own responsibility. It will not be endorsed by the Commission. It will not be, of course, a delegated act. As a consequence, we limit ourselves to explanations and to guidance because it cannot go beyond the content of issued ESRS. So you cannot expect to see any new provision in those documents by definition. This guidance is designed to illustrate and explain the ESRS standards with examples. And if there are methodologies or approaches which are included, which can be the case, then they are considered as one of the possible ways because the standards are open. So it's only one way forward. Now, that being said, we do not ignore the influence of the guidance, but we clearly need to establish the legal status of those documents. Second, it is part of the implementation material. So, you know, there is a clear interaction between issuing guidance on the basis of an initiative taken by the board and the Q&A platform. So, you know, you will understand that, of course, if questions relate to implementation guidance that has already been issued, then we quote unquote reject and we make the link to the answer that has been already given through the implementation guidance documents. So we may have additional, of course, guidance as an addendum or as a separate document. And finally, process-wise, we have established a specific due process whereby those documents are reviewed and approved following technical discussions in the Sustainability Reporting TAG and the Sustainability Reporting Board. And we open a period of public feedback of 30 days, neutralizing the period of vacation, if any. Next slide, please. So 3 documents are already publicly available and should be finalized before Christmas, and therefore the public consultation would start with a deadline of about end of January. So the first one is the list of ESRS data points, which is called IG1. This is the detailed list of the full universe of data points under a granular approach, deriving from the set 1, so deriving from set 1 in the Delegated Act. So this is a very important document which was much expected because it helps companies and auditors, by the way, to perform or review the gap analysis, because many companies already have information of a sustainability reporting nature, but they certainly need to confront this with what is expected from ESRS, because it's a new step to climb. So this one is very important. Then, of course, we decided to focus on the value chain. Value chain is a very specific and sometimes difficult area to cover. As you know, under ESRS, the identification and reporting, identification of and reporting on impacts, risks, and opportunities goes beyond what is under the control of the company. It addresses value chain. So we felt that it was needed to give an illustration of the reporting requirements and also FAQs regarding the value chain reporting and the value chain map. And last but not least, in this first series of documents, IG3 on how to perform the materiality assessment. It is an illustration of the reporting requirements together with FAQs. These documents are already available since, as I have mentioned, our discussions are held in public, and as soon as we discuss it in the public, the supporting documents are available. So, but we are finalizing as we speak. 2 of those documents have been approved already, IG1 and IG2, and are at the moment under editorial review for submission to public feedback. And materiality assessment should be finalized in the course of this week, I hope, and will follow exactly the editorial exercise I was mentioning. Next slide, please. So materiality assessment, next slide. By the way, there is a mistake. It's IG3. Apologies. So it is very important to see the interaction between impact and financial materiality. So to start with, we recommend that people ask themselves, during their materiality assessment, that preparers ask themselves, are there material impacts arising from the matter? And separately, are there material risks and opportunities arising from the matter? If the answer is yes, then the matter is material. So if we are talking about impacts, then there is the need to disclose material impacts. If the matter is material from a financial standpoint, you have to disclose material risks and opportunities, and then disclose the financial effects of material risks and opportunities. This is related to 2 ESRS 2 disclosure requirements, IRO 1 and SBM 3. Next slide, please. So what are the key aspects that are covered? First of all, we try to give guidance, though there is still room for judgment, of course, at company level on the thresholds to determine impact materiality, severity and likelihood for negative impacts, and we also suggest to refer to visuals for actual and potential impacts. And of course, we mention how due diligence, when due diligence processes are in place, inform impact materiality assessment. We also are trying to address the thresholds for financial materiality, the magnitude and likelihood, and the investor's lens, and of course, try to see how that will be translated on the performance of the company. By the way, financial materiality may derive from impacts or may derive from other factors, such as dependencies. This is, for instance, the difference between climate mitigation, where you reduce your impacts, and climate adaptation, where you have to adapt even if you do not have impacts. We try to explain how you can leverage the GRI universal standards, and also how the synergies with the IFRS sustainability standards can be used. And also, we address the frequency of the material assessment, annual ESRS reporting, of course, but then the exercise can be updated, and at a certain moment in time, you probably need to consider doing the whole exercise again, because this is, a regular, so you don't need, to do the full materiality assessment every year, but you need to make sure that it is current and updated. And at a moment in time, maybe after 2 or 3 years, you need to consider again from the beginning. Next, please. Stakeholder engagement with affected stakeholders is covered, because this is an area where we had many questions. We also discussed the role of scientific evidence, also how judgment can be exercised, and of course, quantitative versus qualitative evidence. Aggregation of information is addressed, as long as it's not obscuring, and of course, as mentioned in the standards, the fact that you should not net off positive and negative impacts. Materiality in a group context with subsidiaries. So what has to be done, and of course the link with Article 8 taxonomy. So not the digital taxonomy, but the taxonomy of activities. How do you take account of eligible activities in the materiality assessment? Next, please. Value chain, next. Value chain, to make sure that everybody is aware, coverage of value chain is not expected in all disclosure requirements. So impact, risk, and opportunities, the coverage under the materiality lens, leveraging sector and proxies and average data. In the topical standards, for policies, targets, and actions for material matters, only where these cover the value chain, the disclosure needs to include them. Topical standards require value chain data for a few metrics only. So, sometimes we feel that it's overstate the importance of value chain is effectively critical, but it's sometimes exaggerated through the idea that there is a need to collect direct information from all tiers in the value chain. So we try to clarify in the implementation guidance at the same time how to do it properly and how not to overburden or even make it impossible. Use of proxies after reasonable effort to collect direct data. Okay, so this is a point that is covered. In the interest of time, I'm going a little quicker. Next slide, please. Okay, we clarify reporting boundary versus operational control, and we try to establish what a value chain map can be. Next. On the list of data points, next. I think I already explained that we were talking about the full universe. So it is an Excel workbook that helps navigate and filter the disclosure requirements and application requirements. For current ESG reporters, as I said, it's the basis for a gap analysis. And for all, it helps structure the data requirements to comply with the ESRS. It is not the ESRS digital taxonomy that Tom mentioned. However, as we explained in the methodology, it may support the preparation of human readable reports. We feel it's a bit, but it is the nature of organizing a difficult and complex storage mechanism. We would have hoped that it would be available from day one. It will not be the case, but we recommend to maybe indirectly to consider the digital taxonomy when preparing the human readable document, because that will help when the tags are available for digital reading and digital storing. Next. Now, maybe a few words on the Q&A platform and the interoperability maps. Next, please. Q&A platform is available, has been available since the end of October. It is, there is a process that is a bit complex, and I will not explain this in detail, but, we categorize questions. By the way, we received already 180 questions in 6 weeks. So the rhythm is basically about 10 questions a week. We will have a categorization for explanations and rejections that will not be exposed for public feedback, because explanations are basically navigating the ESRS and finding the right references and making the links between the various provisions in ESRS. What will be exposed for feedback, public feedback and comments will be implementation guidance, and of course, possible amendments to ESRS. Possible amendments to ESRS will have to be considered under a full due process and will be somehow parked. Questions will be logged, will be posted in a log, so that the evolution of the answer will be available on a regular basis. Next, please. So, as it was clearly explained by Tom, and that has been an effort from the beginning, we wanted to build on what was existing and also to contribute to the progress of sustainability reporting globally. So we had very intensive discussions both with GRI and ISSB, and more recently with the TNFD. So, for us, it is very key to be able to state today that we believe that an ESRS report will incorporate probably all, if not all, maybe one exception, all the ISSB disclosure requirements, bearing in mind that, as stated during the high-level event, regarding S1, for matters other than climate, as Emmanuel Faber said it during the high-level event that we organized on November 28, ESRS can be used as a source of inspiration together with SASB. So, to a large extent, we believe that ESRS reporters will avoid the syndrome of having to comply with two different standards since we are incorporated. And this is true also for GRI, where the level of there is a high level of commonality that we have assessed and stated in our various joint statements, with a clear view that any ESRS reporter in the EU would be deemed to be reporting with reference to GRI. So an educational material is, we published an interoperability index with GRI. We are working hard on an interoperability map with the ISSB. This is and regarding TNFD, we have already incorporated to a very large extent the requirements that are in the TNFD framework. So this is paving the way, of course, to human readable format, but also to digital interoperability. Sorry to have been a bit long-winded, but I thought that it was important to mention all the efforts that we are trying to make beyond the other tasks to facilitate the implementation. Thank you so much.
Thank you very much, Patrick. I think there was a very good and useful overview that you gave, and I think all the topics that you mentioned are issues that people are struggling with in practice. So I'm sure they will be looking forward to the guidance coming out soon, as you said. So thanks for that overview. We will now actually go to a panel discussion. And that panel discussion will be shared by my dear colleague Hilde Blomme, who is the Deputy CEO of Accountancy Europe, and she will introduce the people in the panel. So Hilde, without further talk, I'm going to give it to you.
Thank you very much, Mark, and good morning to all, but especially to my panelists, very distinguished ones. I will first introduce them, and then we will get started. This is really a panel to really focus on more practical perspectives on the ESRS, but also and especially on the two implementation guidances. And if I say two implementation guidances, I mean especially the ones on materiality assessment and the value chain. So I am joined first by Simon Braaksma. Simon is the Senior Director Corporate Sustainability Reporting or Corporate Sustainability, sorry, at Philips. Welcome, Simon. We also have Chiara Del Prete. She is the chair at EFRAG of the Sustainability Reporting Technical Expert Group. Welcome, Chiara. We have Olivier Scherer. Olivier Scherer is within Accountancy Europe the chair of our Corporate Reporting Policy Group. And in real life, I would say he's the EMEA Sustainability Reporting Leader at PwC. And last, we are also joined by Wim Bartels. Within Accountancy Europe, he's the chair of our Sustainability Policy Group. But in real life, he is the European Sustainability Senior Partner at Deloitte. So we will have a few of the subject matters first on the practical challenges when implementing ESRS. And so it would be great to hear from your perspective. And Simon, I think we will go first with you, obviously, as a preparer. What would be your main practical challenges?
Yeah, thank you so much, Hilde. Can you hear me?
Definitely.
Okay,
go ahead.
Thank you. So first of all, we at Philips do see the CSRD and the ESRS as an opportunity rather than a compliance effort. And I think that is very important. And there are many people dialing into the webinar. And I think that is a very important message. I think society at large is facing a number of gigantic problems. And we have seen that the market is not able to solve them. And what we now have is that basically the regulator is stepping in. You could always wonder whether, a reporting directive is the right way to address a number of societal challenges like climate change, biodiversity loss, social inequality, and what have you. But what you do see is that it is working. In the sense that, if you see the number of companies in the Netherlands, which is a market that I'm very close to, I meet with all the ESG people with listed, but also many of the not listed companies. And you see an enormous amount of inertia. People are moving and they're doing things. And one of the things you will see in the CSRD, and I think that was also alluded to by Tom and Patrick, is that, there are a lot of disclosure requirements, but you will look pretty stupid if a topic like climate is very material to your company. But when you need to disclose, it appears that you don't have any policies, you don't have any targets, while at the same time you're, for example, advertising how green your company is. And that will come to an end, I think. And in the bigger scheme of things, that is also what society needs. Europe is leading, I think, which is also commendable. But if I now look at, that was your question, so sorry for the long introduction, Hilde, but it's good to set the perspective. If you now look at a number of implementation challenges, for the people in the audience who don't know Philips and our track record, we have been reporting for 15 years in a row through an integrated report. For more than 12 years, we have had reasonable assurance on all our disclosures in that integrated report. We've been complying with the GRI standards, the TCFD reports have been published by Philips, etc. So I would say we are pretty experienced. Still, what we have seen, as we did perform our double materiality assessment last year already, not completely in line with the ESRS requirements because those were not out yet, but we did our best. We came to 6 topical standards that are material to Philips, being climate, circular economy, our own workers, workers in the value chain, S4, that is consumers and end users, and governance, basically, or corporate behavior, or whatever it's the exact name. So 6 standards. And then we came initially to a count of over 900 data points. With the final standards being published in July, that came down to about 800 and 130 something metrics. And that is a massive effort if you compare that to what we have been doing in the past with that whole extensive process. So what we're doing at this moment, and I would really recommend everybody who's listening in and doesn't have that sense of urgency, this is a massive effort and you should start in a very timely manner, starting with your double materiality assessment, then doing your gap assessment, and really get your act together. Involve quite some people in your organization after you've been talking to your board, because as we all know, at least in the Netherlands, not being compliant with the CSRD is a criminal, or it's an economic crime of the board of management, which I don't think anybody would be accountable, would like to be accountable for. So there's really a sense of urgency, but there's also a massive task ahead of you, and you really need to start in a timely manner. And we need to be very careful that this doesn't become a compliance effort, but still, you know, a company is telling its story on the impact it's making and the efforts it is making to reduce that impact, or maybe even change that into positive opportunities, really.
Thank you very much, Simon. Very good to hear that, you know, you see this definitely as an opportunity. So that's very good. I would like to go to Olivier Scherer next, who is, you know, from the profession, but he's very much looking with his clients into how to prepare for the reporting on ESRS. So Olivier, could you share with us, you know, what you see with your clients as the most practical challenges to implement the ESRS?
Thank you, Hilde. Can you hear me?
Very good. Thank you.
Yes. Okay. Thank you, Hilde. Thank you for inviting me to this panel. I'd like to maybe start by saying that with, of course, the exception of most of the largest preparers, even though not all, but lots of preparers are not yet familiar with sustainability as a topic. And of course, consequently on sustainability reporting, and probably have not yet fully realized the depth of the project, the complexity, and its expected operational implications. I would say probably echo what Simon has just said. ESRS is not only about reporting, it's before all about transformation, and it's a tool to monitor progress towards transformation. So about challenges, probably I've categorized them in two different natures: project management and applying the standards. So with respect to project management, the first aspect, and again I will echo what Simon said, it's understanding that this project is a corporate project, and that should involve all internal stakeholders, starting with governing bodies, of course, but then finance, human capital, legal, supply, and so on. And not only the reporting team, because this project is supposed to have operational impacts. The second aspect is about resources. Not underestimate the resource needed. It's also about recruiting, upskilling the people, and retaining, of course, those people. Another aspect is, in terms of project management, doing things in the right order. Starting with double materiality assessment, we'll come to that a bit later, before doing the gap analysis, especially given the time pressure that implies to prioritize the topics. And last but not least, aspect of our project management, it's of course, once we know what disclosures have to be reported, it's about collecting the data, which appears also as being hugely challenging. With respect to applying the standards, a few things. It's, well, first, understanding the standards and learning to navigate in the standards. It's also about understanding that what is required is not only what is in the standards, but also providing entity-specific disclosures, which are also required, and especially in the context where the sector-specific standards do not yet exist. It's understanding the double materiality assessment methodology, especially for social, which lacks a little bit of guidance, and then performing the double materiality assessment itself. It's determining the necessary depth of value chain reporting. Some preparers go very far in the value chain. Some even went up to tier 7, but maybe not everyone can go that far. So how to set the limit? It's another challenge is the lack of clarity in how to do things for many topics, so which implies in many circumstances a lot of judgment. And probably the last point I wanted to mention is anticipating financial effects, which is a bit new to many preparers with respect to sustainability.
Thank you very much, Olivier. A little bit more granularity, but I think a very important point. This is not done just for the reporting. It is to really have a sustainability transition. And Chiara, very happy to have you with us and to bring you in as a standard setter here. You have been living and breathing the ESRS development for quite some time now. So from your perspective, if you think about it now from the practical point of view, what do you consider is, the most important practical challenges for implementation? If you keep your answers brief, that would be great.
Thank you, Hilda. Well, Olivier pointed out the difficulty for those that have not been so deeply involved as we have been to understand the standards, to navigate the standards. So there is a lot, we see a lot of questions in the Q&A system relate actually to answers that we think are in the standards. The majority of them can be addressed by what we call explanations. And this really shows that there is an investment to be done to understand the standards. Our videos, for example, educational videos on the basis of the November drafts, we are still working on the new one, have received dozens of thousands of clicks on YouTube. So that's looking into the topics, for sure, materiality assessment and value chain, we know are the most challenging areas for the preparers, and they have been already mentioned by Olivier before me. And also the list of data points is one of the most downloaded documents from our website. So it shows that there was a real need for that. If I look at the questions that we have received, 44% of them come from preparers. So this shows that effectively there is a big need for help. And when we look into the topics, 36% refer to cross-cutting issues. So ESRS 1 and 2, the materiality assessment, the value chain, the general structure of the report. 20% refers to environment, and GHG emissions is very, very frequently a question there. Another 20% on the social standards are relatively new. They ask information about the definitions of employees, details on the remuneration, work-related illness. These are items that are very frequently asked.
Good. Thank you very much, Chiara. Now, when can I come to you? Last but not least, I would say, and as Tom already pointed out, there is also the assurance aspect to the ESRS reporting. So, as an assurance provider, from your point of view, what do you see is the main, challenges for implementation?
Yeah, thank you, Hilde, for that question. Good morning, all. I think we heard from all three previous speakers about the big journey ahead, I would say, and also the some of the uncertainties, if you like, that we have to deal with. I think the same applies to assurance providers. But maybe starting with, and I think Olivier also alluded to that, and Simon said it also in another way. We have to build a lot of capability, but also a lot of capacity to manage this. As we know, it will expectedly apply to about 50,000 companies in EU. We are currently at 10,000 under the NFRD, so that is a fivefold increase of capacity needed. And as you can imagine, that is of course a big challenge for the auditors profession to get it arranged for. And I know from all the large networks that they are working on upskilling and building out capacity, but the time is ticking. So that is, I think, the first challenge. Then a second one, I think, relates to what we heard also in Patrick's introduction, and also Olivier, where he said, yes, some companies go down 7 tiers, but others only go 1, and where do you draw the line? And Simon, I think you referred to the number of indicators that you have to work on, even after 25 years being in this space and reporting on it. So I think the whole journey is a second challenge also for auditors. We don't have the exact criteria. We don't have working programs for this type of information, and we need to learn together with the companies, I think, how we go about that, how we deal with that, and how we dedicate all our intelligence that we have to think about what is reasonable rather than looking at a checklist or taking the work program because it's not there yet in its entirety. And the standards provide us with all the requirements, but as I think those of you who have seen them, not to the level of detail that we have developed over time for IFRS. And then, a final challenge for now, I think, then relates to how we report about all this. There are some discussions about will there be qualifications in the assurance reports? Will we even issue adverse reports? My personal view there is that we should go as much as possible on the journey with the reporters. So we would have to acknowledge that some things have to be developed, that sometimes the metrics is not there yet, or it is estimated rather than exactly measured because of the phase of development. And to recognize that and not directly start to move to a qualification or adverse opinions. However, there is of course a limit to it where you say, yes, sorry, but now the report really doesn't meet the requirements that ESRS have set. And what does that then mean for our assurance reports? And that I think is something that we also have to learn about. And to harmonize as much as we can within, of course, the firms, but also across the countries and in the EU. If you ask me, Hilde, I think it will take us, all of us, a couple of years before we see some, call it calibration, but we have and will deal with these challenges. So that is it as an intro, I think.
Thank you very much, Wim. I think there are two key words there. It's a journey, not just for you, but for everybody. And cooperation, working together to get there, will be key. And as already said a number of times, and especially also by Chiara, the main implementation issues are first and foremost around materiality and its assessment. So let's go to that subject matter and let's focus on that. And Chiara, I would like to come back to you as the standard setter. We heard from Patrick that before Christmas you will issue for short consultation the draft materiality assessment implementation guidance. So many stakeholders will look at this and will want to comment. So what is it? What are the topics? What is it really that you would appreciate in getting as feedback from the commentators?
Thank you, Hilda. This is a very important question. These documents are open for public feedback, but we don't have a questionnaire where we ask specific questions. So any type of feedback, including on clarity of the document, is welcome. But I would say that the most debated and sensitive contents are those where we would like feedback. For example, I would mention Chapter 3 and frequently asked questions. So Chapter 3 in particular treats the problem of how is the materiality performed. There is an illustrative process that is articulated in steps, and this has not to be understood as the only possible process. We, in particular for the auditors, we don't want or we don't intend for this guidance to be used as a checklist, so that if a client doesn't have the specific step, then it's not in compliance with ESRS. These are illustrative, so it's important that this aspect is considered. Other processes are also possible. Another input would be welcome on whether it's clear how we articulate the interaction between impact materiality and financial materiality. This is something new. But also on roles and approaches to stakeholders' engagement. Does it correspond to the current practice, to the expected practice? Is there a difference when engaging with affected stakeholders or with other stakeholders? What do you expect from both of these two categories? And then another area is setting thresholds, where I know that some would have liked to have more direct guidance, use this quantitative threshold. Unfortunately, this is not possible because we want to keep the necessary judgment to maintain the standards relevant. So it's important to give us feedback on the thresholds. And then there are a number of frequently asked questions on financial materiality, how it interacts with the financial statements, the relationship with the IFRS standards, frequently asked questions on quantitative versus qualitative evidences, scientific evidences, gross versus net, so reporting impacts before undertaking actions, and also the interaction with the taxonomy. So these are aspects that we have largely debated, and so I expect that it would be helpful to have a feedback there.
Good, thank you very much. I'm not sure that the rest of our panel will have responses to you already on all those questions, but let's see. So as far as the draft materiality assessment implementation guidance, Simon, can I come back to you? And obviously you're also a EFRAG SRB member, and I'm sure you have spent already quite some time looking at the guidance. So it would be good to hear from you, is that for you as a preparer a useful tool for the ESRS implementation? And for you as a company, what are your main challenges in the implementation of the double materiality assessment?
Yeah, thanks, Hilda. And I tried to be brief. And first of all, I would like to refer to what Wim just said. You know, this is not an implementation guidance really focused on listed companies that have been doing materiality assessments for 15 years and then, you know, have been using the GRI standard, for example. You know, there are 50,000 companies, and many of them don't even know what a materiality assessment is, let alone a double materiality assessment. So the need for guidance was quite clear. If you ask me, you know, does it suit its purpose? I think it's a good document. It's a start, but we've also been, you know, is it now really something that if you've never done this, first of all, I think you're intimidated by a document that is quite extensive. You know, it's 40, 50 pages, and it's complex. We tried at EFRAG to make it as simple as possible, but some topics are sometimes difficult to make simple. I would personally like to have had a little bit more of a pragmatic approach. And what I see now when we come to challenges is that, first of all, you know, the fact that we will have all this information assured will mean that all kinds of accountants and sustainability specialists at accountancy firms will be diving into this. And what I see now in practice is that already now, and I can speak from experience because we are going through this process now with our annual report 2023, and we want to have reasonable assurance on this, is that you will see that, you know, we see form over substance really. And that is a pity, because in the end, you know, why do we have a materiality assessment? It is basically to arrive at the topics that are material to the company and report on those. But what we now see is that there's a lot of focus on all the steps that you're taking. And in the end, you know, I think that is the wrong balance, really. And that is a pity. You know, an accountant, and I need to first of all say that I'm not being paid by any of the accounting firms, and I'm not an accountant, but they really like to have a number of list of topics that they can simply go through, then put a tick mark behind it, and then we go over, we're all covered. You know, if the regulator comes in, we have done what we needed to do. But that is shifting a little bit the focus. To give an example, Chiara talked about the difficulties with thresholds, and I fully agree. Yeah, but what do we get now? If I even do apply a low, medium, high threshold, what is the accountant asking? What is your threshold for low? You know, so I still, you know, need to have a long debate, and some of these topics are very difficult to quantify. If I talk about people being my most important resource, you know, now I need to look at the impact of, you know, specific items on my own staff. That is sometimes difficult to quantify, but still, you know, the auditor would like to see a threshold. So this is going to be a challenge, but we need to make sure that the end result supersedes really, and we don't get lost in the form over the substance.
Okay, thank you. I think many people will relate to you that this is complex, and especially the first time you really have to do it based on new standards. So Olivier, when you are assisting clients trying to prepare for the implementation of the ESRS, from your point of view, doing this, you know, is the materiality guidance that is coming up from EFRAG, is this a useful tool? And then also, what are the main challenges that you see in implementing the materiality assessment at companies?
Yeah, so of course the answer is yes, because any guidance is useful, and I guess it can usefully as well not replace, but as there are no basis for conclusions, I guess providing additional guidance is useful. But well, of course, as any type of guidance, it's we can expect improvements or simplifications in the wording, and that's what I'm hearing from our clients, even the largest one, that believes that the wording is still a little bit too at the level of the standard and not at the level of what we can expect from a simple guidance, and probably adding some clarity on certain aspects. So what are the biggest challenges when it comes to double materiality assessment? I would also echo what Simon said. It's new to many preparers, but also auditors. I can probably mention three main challenges. One is about the selection of stakeholders. The other one is about ranking, and the third one, which is about thresholds. which Chiara mentioned, for which we can understand that there will be no guidance, but I will still mention it. So with respect to selection of stakeholders, I think that one of the challenges to identify the appropriate and relevant stakeholders that the entity would want to reach out to which extent can or should a preparer rely on stakeholders? How far should we go? How many stakeholders should be identified and selected? And the selection should be made in such a way that the outcome of the outreach and analysis are not biased to the extent that the stakeholders might be focused on their own issue and do not have a broad perspective. So we have to make sure that the outcome is not biased. Another challenge is about ranking. Ranking is not required, but that's a possible methodology that can be applied. And we have many questions on that aspect. The principle is to assess IROs on a gross basis, but in practice, many are still confused on whether the assessment should be performed on a gross or net basis, and whether there are differences depending on whether we talk about actual or potential impacts and risks. Another question is how to consolidate the ranking of the IROs which are identified. So rankings might be done at a certain level of granularity, but when we aggregate them all for one particular IROs, how should we aggregate them? And which granularity and aggregation principles should be applied for that aspect? The third part is type of challenge that I wanted to mention is about thresholds. So once IROs are identified and assessed, setting the appropriate thresholds to strike the right balance between providing either too little or too much information can also be an area of judgment, but where striking the right balance will be important. Maybe to conclude on that aspect, I think that what is a challenge and probably a matter of attention is that no one has a genuine holistic view of all the impact, risk, and opportunities, and therefore it implies to at the end of the process to step back and to ensure that IROs are neither over nor under weighted. And I will pause there.
Thank you, Olivier. That's quite a challenge, or challenges that you put up there. Now, Wim, I would like to come to you from the assurance perspective. You have already given some indications on the ESRS, but if we then focus on the materiality assessment, a fundamental starting point, I would say, also for an assurance provider. So, do you also believe that the guidance that is coming up will be useful? You have been closely involved as an EFRAG SRB member, and what do you see as the main challenges related to the materiality assessment?
Yeah. First, let me say, start with saying that I will be responding in my capacity as Accountancy Europe chair of the Sustainability Policy Group, so not to confuse roles here. But I think from an Accountancy Europe's perspective, so therefore from an auditor's perspective, we were also desperately in need, I think, of further guidance, because the standards don't tell you in any regard exactly what to do. So any guidance is welcome in that regard. Now, as I think Chiara and also Patrick said earlier, it will be guidance. It will not tell us what we exactly need to do. As auditors in general, we would of course love to have this 5-step process with thresholds defined and quantified, etc., so that we can exactly follow a process. But then I related to my own experience, and I'm 20 years in insurance and working also on reporting now with our clients. And I see that indeed every company has its own characteristics. Every company has its specific processes already in place or not in place, and therefore the process will really be different from company to company. So I welcome the guidance in that regard. I welcome also that it is guidance and that it's not defining that process. Let me then say a word to our own profession, and I bring that back to Simon's earlier comments. Simon said we see form over substance coming in, and I see the same. And what is really needed, what we should first of all understand, the materiality assessment is there to identify the material matters that you need to report upon. That's all it needs to do. And that comes with a good understanding of the business. And if you are a good auditor, you understand the business of your company, of your auditee. And by that, you can already define the 5, 6, 7 topics. If you ask me, would climate change be a significant issue for Philips? We don't have to discuss that. We know that. Would circularity be a significant issue for Philips? We don't have to discuss. We know that. If you then ask the question impossible to answer, how did you define the threshold for low, as you suggested, Simon? That is a question we all know you can't answer because we're trying to put the best of our intelligence to this process. So to the audit profession, and I think that is one of the challenges for us, is how do we go about this in a reasonable way, such that we help to drive the progress of companies, we help the reporting, and we help to get to a sustainable economy. Now then to the, maybe further to the guidance in order not to get excited about this. Further to the guidance, will there be challenges in there? Yes, I think quite a number. And we will have to look at it from Accountancy Europe's perspective, of course, and we will do. What I can see is that we would ask for some further clarification, sometimes simplification in specific parts when we look at it with a specific auditor's lens, so to say. But I will personally watch that we don't try to go too deep, because I also know that we, and that's my other role at the SRB, we can't answer all the questions, and we don't want to prescribe, because then we get into further regulation, and that is not what we can do. So, you know, we have to give that a good read. What are some of the typical challenges that also I think the SRB can solve? It relates back to Olivier's points, amongst others. What are the thresholds? How deep should I go into the value chain as part of my materiality assessment? Yeah, these are challenges in practice, in application, and I'm not sure that the guidance can answer these questions to all extent. We have to learn together. That applies to the reporters. That applies to the SRB. That also applies to us as auditors, I think, and we should really make sure that, I said that earlier, that we dedicate all our intelligence to this, and that we keep a common sense approach and do substance over form, as we learned in our education. Enough, Hilde, back to you.
Good. Thank you, Wim, for that. Looks like substance over form is a recurring theme here, as a few others. Now, to round off on the sustainability assessment implementation guidance, any final words, I would say, like your top 3 very quickly on, you know, how do you really think it could improve, you know, within the framework of, you know, this is just explaining the standards, it cannot go further, as you already pointed out. So Simon, your top 3 on how do you think it could be improved very quickly?
Now, first of all, I'd like to thank all the other speakers and Wim in particular for saying what he said. And I think the $64,000 question is really how to keep this all pragmatic, because we can get lost completely and spend an awful lot of money. Then don't forget this, that also many companies don't know how to start. So what they do, they hire a consultant. I've seen consultants asking amounts ranging between 20 to 150,000 euros to just do a materiality assessment. And that's insane, basically. And if that is the result of what we're trying to get going here, you know, we missed the boat completely, really. So we need to remain pragmatic, and there, you know, and that will be a challenge. But maybe also the auditors should ask themselves the question, you know, Wim related to climate action and the impact on Philips and the fact that this is a material topic. You know, my auditor is you know, he is completely on board on all of this. Still, what do I hear? Well, the ESRS prescribes that I need to have the following steps. So can you please, you know, deliver all of this so I can tick it off? And I think that is really, you know, we should find a pragmatic approach to all of this, rather than create what we call in Dutch a paper tiger, basically, to get something going that we all know, you know, is very obvious, but still we need to follow the guidelines really. So what I would really ask the people who are on the line to do, and please organize yourselves in industry groups or whatever, because else the secretariat of EFRAG, where Kia is doing an amazing job, will get killed by the number of respondents to the consultation feedback. But please, you know, from a pragmatic point of view, provide your input as well. Is this all doable for you? Is it helpful? And if not, don't say it's not useful, but tell us how it would be. So if people online could really do that, that would be a great win for EFRAG and for sustainability in Europe to start with. And don't forget that we try to lead and be an example for the rest of the world. Thank you.
Good, thank you. Pragmatism and being useful. Olivier, anything to add to that? So how would you like to improve the materiality guidance that we know now in draft? Very quickly, your main 3 asks for improvement.
Okay, I will have 4, if I may. But my number 1 is probably very consistent with what Simon just said. I think that what could be helpful with respect to identifying where to strike the balance between overloading or underloading the disclosures is for EFRAG to explain to us what is in fact the objective of reporting. Does a matter need to be of interest to a critical mass of stakeholders as opposed to a narrow audience in order for it to be a material impact? I think the answer is yes, and I think it would be consistent with what Simon just said, but this would be worth clarifying, because that would avoid to obscure what is truly material and relevant information, and also to ensure that the policies and actions and targets are actionable, because at the end of the day, that's what matters, is that what we report upon is also what entities can act upon. My second point is about proportionality. Putting aside SMEs, the same processes seems applicable to all types of preparers. So maybe reflecting on the notion of proportionality to ease the burden on some companies that probably would not find very useful and relevant to put in place heavy processes. My number 3 would be clarifying which IROs should be ranked. Should it be all of them, or the most material ones? The less material ones are only those for which there is the most judgment. And my last one, that relates to DMA for social, which is a bit light in the guidance, and for which it would deserve maybe a little bit more guidance.
Thank you, Olivier. Last, Wim, I come to you. You have already given some challenges. So any top 3 improvements you would have for the materiality assessment guidance?
Yeah, well, as I said, I think we have to look at it from the Accountancy Europe's perspective, but with that comment in mind, and then, you know, on the SRB side, I think we together have done our very best to get to this document. We believe now it is clear and everyone will understand. But I think when we're gonna ask it to our colleagues at Accountancy Europe, we may see like, oh, this is not clear to us. Can this be simplified? This is really too high level. I think those would be amongst the type of challenges that we or areas for improvement, sorry, that we would come up with. And as I said, you know, we can think of many more areas for improvement that are at this moment just not possible to implement. So I would ideally, again, as an auditor, say, can you please specify how far I should go in the value chain? And apart from the separate guidance on that, can you please help me how to exactly set the thresholds? Can you tell me how many stakeholders I should talk to? And to Olivier's point, how many should count in order for a topic to be material? But these are all unanswerable questions at this moment. So that is just, I think, my personal overall recommendation would be for the guidance, let's review this in 1 to 2 years' time. Then we have first experiences. Then we can see some good practices that we can discuss in the SRB and say, this is actually something that helps the wider community, if you like, to get better at this. And maybe one final point that comes back to common sense and substance over form, etc. I just, Olivier triggered me with his comments that we should not overestimate the understanding of the users. So if we would go out with all the impact, risk and opportunities, I'm not sure that investors and other stakeholders will be able to digest that and understand that in its entirety. Also, they will be on a journey. So also there, I think we should go for simplicity first, and then over time it will evolve and it will become better and better and better.
Good, thank you, Wim. It's a combination of learning from the journey and then applying this in practice. It's good. You also refer to the value chain, and I think that is the next subject matter that we should focus on. And Chiara, I would like to come back to you, and I hope you are not too shocked by Wim asking to redo the guidance in a year's time. So let's hope that we can find another way to beef it up when it is needed. But when we look at the value chain implementation guidance, again, what are the topics that you would really look to have targeted feedback from stakeholders on?
Well, first of all, we debated lengthily the reporting boundary. So the fact that the reporting boundary is the same as financial reporting, but then it is expanded to cover impacts, risks, and opportunities arising from business relationships. And this includes for the environmental standards a new concept that is the operational control. It's not new, completely new, because it's embedded in the GHG protocol, but we have also expanded by analogy its use to some of the other environmental metrics, a couple, very few, but this is new. So we really would like to have feedback. And also we see many questions in the Q&A platform. And so we tried to provide a bit of clarification of the logical flow for treatment of the various types of investments when they are not subsidiaries. So joint ventures and associates, joint control, how they are treated when they are actors in the value chain and when there are simple investments. And for the investments, we couldn't do much because we are pending the consultation on the financial institutions and capital market standard. We could not preempt the content there. Then also there are a few frequently asked questions. One is FAQ 4 on the coverage of the value chain in the materiality assessment, because the two guidance are interlinked one with the other. So this is also interesting. And then on the concept of reasonable effort, because you have to try with reasonable effort to collect the data when you need to include value chain. But then after the reasonable effort, when it's not possible to collect data, you use proxies. And there is also guidance on developing estimates in this case. So a feedback there would be welcome. Finally, we think we have offered a very powerful tool with the value chain map, which is illustrating what is the coverage per each and every data point that is sensitive for value chain, what is the approach. And this really has been developed to demystify the value chain and really to focus where the attention needs to be put and focused.
Thank you very much, Chiara. I'm sure this is quite useful, or it will be quite useful, because the questions on value chain are many, especially on the boundaries. Now, if I go to the other panelists, obviously, I would like to hear your views on the value chain implementation guidance. And Simon, if I start again with you, you know, as we talked about the materiality assessment, also it would be great to know from you, you know, do you think the guidance will be useful? You know, what do you see for the value chain as the main challenges? And then how do you think the actually guidance could be improved based on how you know it now?
Yeah,
thank you.
Thanks for that. And I would like to also come back again to what Wim said earlier. Not only should the auditor know, you know, what the company is doing and where the impact of the company is, the company itself should know that first and foremost. And we at Philips have been, you know, reporting externally on what we call the environmental profit and loss account of Philips for a longer period of time. And by basically applying a life cycle analysis methodology, which is a little bit of a technical term, but basically that you know, gives you more insight into the impact you have through your value chain. We know very much, and for those who don't know what I mean by this, if you go to our annual report and you search on environmental profit and loss, you will see a very nice bubble chart where we have tried to monetize the environmental impact of the company. So basically what you see there is that we have an impact mainly in the supply chain. Our own operations, we hardly have any impact anymore because we're running Philips on 100% renewable electricity. We're phasing out fossil fuels. For those on the line that are working at a fossil fuel company, we're not a good customer of yours, and we will not in the future. And we have a huge bubble in the use phase of our products. Yeah, and basically that kind of knowledge informs very much what you need to do with your value chain. Are we subsequently, you know, sending surveys to the thousands and thousands of suppliers we have at Philips? No, of course not. It doesn't make any impact, and or it's not sensible. And I would like to remind people, because we see all kinds of things happening now, companies moving to panic mode and starting to send surveys to every supplier they have, which is insane, because not every supplier has the impact that is really something you would like to see here. You know, at Philips, we know, due to the fact that we've been participating in the carbon disclosure project for many years, we have a supply chain program with the CDP as well, where we include in the beginning some 350, now 500 of our largest suppliers. There we know where the impact is. We don't have to ask those other thousands and thousands of other suppliers that we have. Next to that, with regard to the use phase of our products, we know also very much which products have an impact. And what we are doing, and that is also what Chiara mentioned, you know, based on the LCA methodology that we have applied, we know where we sell our products, we know the energy consumption of the lifetime, we know the grid emission factors, and it's all a little bit technical, but through that, we know where the impact is and we can disclose on that. So I would really recommend people to, again, take a pragmatic approach, do understand where the impact is, and try to either yourself come up with some kind of a model, or, you know, even better, maybe with your industry, if you're a smaller company, your industry association, come to some kind of a modeling, for example, for climate impact. If you're in the construction industry, team up with your peers and have your industry association, you know, maybe hire Wim or Olivier or his company to come up with a modeling, or see what is already there, because there's an awful lot on the market already. You don't have to invent everything yourself, and focus on those things that are really, really impactful. Thank you, Hilde.
Thank you, Simon. Pragmatism, simplicity, those words seem to be very key. Olivier, when I come to you on the value chain materiality, the value chain implementation guidance, similar considerations as Simon on the usefulness, the challenges, and how you would like to see it improved. The floor is yours.
Yes, so obviously, same answer as for double materiality assessment. The guidance is useful and would be useful. So in terms of challenges, I think the overarching principle is simple. the reporting boundaries for sustainability reporting of the own operations are the same as for financial reporting. But then is introduced the notion of value chain, upstream and downstream, which is also understandable conceptually. But the standards have introduced some features which can either introduce confusion or complexities, which in practice raise questions and challenges with respect to own operations and value chain. So maybe I can start with some aspects relating to own operations. The main question relates to the notion of operational control. This is a notion which is not well understood from the financial reporting world because it appears as contradicting the notion of financial control. For instance, how can an entity have operational control over an associate when by definition it only has significant influence? Still on operational control, when should this concept be used? We see it appearing in E1, E2, and E4. So it doesn't seem to apply to all the standards, but probably the implementation guidance could be an opportunity to clarify where it applies, where it doesn't, and why, which would be particularly useful as there are no basis for conclusions to the standards. And besides the distinction between operational control and which has consequences on operations and supply chain is important because this is also driving the disclosure requirements, which are different for own operations and for the supply chain. And last but not least, for own operations, when we talk about associates, GVs, and GOs, what is the percentage that should be applied? And what is the underlying principle to assess the percentage? In some cases, the standard is clear that it should be 100%. But in some cases, it is less clear. So additional guidance on that aspect would be useful. With respect to value chain, it is still unclear where to start and where to end. I gave earlier the example of this car manufacturing entity, which was going up to tier 7 in the upstream value chain. But same question could also apply for a travel agency, which is acting as an agent. How far should it go? So there are issues like that which are raising challenges and for which difficult to find answers in the draft guidance at this stage. And of course, the same issue can apply in the downstream value chain. Should it and so the question is where should it end and where the entity does not have the ability to influence the actor in the value chain, or should we stop where the contributions to the added value become marginal, or other type of considerations that could help the preparers to assess where to stop in the value chain?
Thank you, Olivier. Very challenging questions, I would say. Wim, last but not least, again, we will come to you to round off on our value chain implementation guidance discussion. So from your point of view, the assurance one mainly, surely a lot of questions on that as well. So how do you see the guidance, the challenges, and potentially the improvements that we would need to the guidance there?
Yeah, I think, well, also for value chain, we learned that at the SRB, companies and auditors were in high need of further guidance. So I think in that regard, also this guidance is very welcomed. Where the guidance provides some further clarity, I think, is on how to go about operational controls, joint ventures, etc. But not in its entirety, because that is also, again, not really possible, I think, at this moment. And I realize, again, triggered by you, Olivier, on operational control, I think that will also be an issue for auditors, like how far should we go? And I think, well, we have to discuss it at Accountancy Europe, but I think we may come back with some further questions on the principles behind this. So Olivier triggered me because I worked in the past with, amongst others, oil and gas companies, and oil and gas companies are very used to this because they invest together in in a company, then one has 20%, and then the other say like, can you please manage the company? And then what is the case? What is the principle? Well, that company can steer the performance and can drive ESG topics. So the underlying principles, I think, should drive the discussions. And maybe, you know, the guidance could provide some further insights on what are the underlying principles, and maybe some pragmatic questions, if you like, that all of us could ask in order to say, how far should I go in the value chain, and what about operational control? I think there are two other key challenges from the audit perspective. The one regards the data from the value chain, and the standards are, I think, in itself clear on it. Ask the information from your suppliers. If not possible, use proxies, and that is then acceptable, of course, if these proxies are acceptable. From an audit perspective, that is quite a challenge, I think, and we have again to learn in practice how to go about it. But if I take again another example, for carbon emissions, you work with CO2 factors, CO2 equivalent factors, and they are not updated on a monthly basis, not on a yearly basis. They are updated every infrequent number of years, and they come from different sources. Now, we auditors can make a big fuss of that, right? Your data are not current. Why did you use that source and not that source? I think there also well, maybe again the guidance could provide some further clarity on the principles, if you like, and we auditors need to learn that in this space data are really different, and we are honestly not so interested in the exact number. We are interested in the trend and getting it to zero. That is what we are only interested in. Well, that will be, I think, a challenge in practice, and the guidance then does not yet give further clarifications. So also maybe here, Chiara, put this on our list for the year after next. No, I'm kidding, of course, right? But I think really to try to come up with good practices over time and bring the learnings to the wider community, that would be good. Yeah, the final challenge is for financial institutions. They are also desperately looking for how far should we go, and what should we do with the companies that we finance or invest in. The guidance, honestly, I think does not give that answer yet. From the SRB perspective, we'll be working on that shortly, but have to be put on the agenda, so to say. And yeah, it would be great if the guidance could already provide some further insight into that. But yeah, to be honest, I think it's just a little too early. Again, I think the guidance is very welcomed. It will help definitely auditors to have a better understanding. We may look for some further, call it clarity, or well, what I just called it came up like guiding questions or so that could be asked to assess how far to go, or whether to include a certain company or not. I leave it to that, Hilda, also in light of the time.
Great. Thank you very much, Wim and Olivier and Chiara and Simon. This is a rounding of our first round of discussions, and we have received from our live audience a lot of questions. So we will not be able to deal with all of those, but we will focus on a few very popular ones. And the first question, and I think maybe this is one for you, Simon, it is related to the group reporting. And the question is, you know, for group reporting, how to make the materiality assessment, how to collect the data, how to disaggregate, how to consolidate, you know, and people really ask for any experience to share to help with this. So I think you're the prime person maybe to respond to that, Simon.
Yeah, and we can spend another hour on this or longer, but we're not going to do that.
Just a few minutes. Thank you.
No, exactly. But talking a little bit from experience, and as I said, we have had our integrated report for 15 years, and with regard to environmental reporting, I think more than 20 years. So what is one of the very distinct differences and one of the challenges of auditors moving in this unpaved territory or new territory is that you don't only have an SAP system or an Oracle financial system or whatever where you're pulling your data from. The depending on the company that you're working in and the outcome of your materiality assessment, topics are quite broad in general. And even if you look at the disclosures that you're expected to report on when it comes to S1, your own workers, and maybe good for everybody here in the audience. In the beginning, earlier, there was a requirement to have a number of disclosure requirements under S1 as material to all. So you always had to report, and later this was reversed, and it did upset some of our social partners in our sustainability reporting board, because they said, now we will not see the information anymore that we wanted to see, but in EFRAG, in the Sustainability Reporting Board, but also companies I talk to, most of them will simply say, you cannot claim that your people are your most important resources and then don't disclose any information on S1, your own workforce. Now, why do I say this? Because this is a very good example of just the complexity that we have here at hand. If you look at the disclosure requirements under S1, it includes a lot of details on your workforce, for example, gender diversity, age diversity, which some companies can simply pull from a central system like we have at Philips, which is called Workday. So we've got a central HR system that we can pull data from. And that is an advance. I thought most listed companies would have such a thing, but I've been told that I was wrong. So that is already a challenge, the consolidation of all of that and making sure that the definitions are the same. And of course, with regard to age, the CSRD or the ESRS are quite clear, under 30, 30 to 50 and above 50. So that is, if you know the date of birth of somebody, you can easily extract all that information. But if you then go to a next topic, learning, and the number of hours people put into learning. Again, we're happy that we have got the Philips University. We have good data information or information on courses and hours spent there, basically, which is good. However, we now also need to report on the gender split in hours of learning. And I think that's, it's a different dimension, but at this moment we don't capture that data. So we need to think, how can we do that? And by linking employee IDs to gender, you probably can get this all worked out. But I'm just saying this, that only for one specific topic, you already have multiple systems. A traditional accountant is used to running a number of reports, and I'm simplifying things, but you have a source system that is called SAP, for example, and there you can run your P&L, your balance sheet, your movement schedules, and whatever from. And this is, one element. Next to that, in many cases, people that are working in HR are not used to control frameworks like we have in the financial world. So that is, again, a big challenge. So if you then think about all of this, and yesterday I was talking to some accountants and I said, you can make your accountants very, very happy by not having those controls in place, because they can do all the substantive testing and they will send you a very nice invoice. But I don't think that is the purpose of the CSRD and the ESRS, to make Olivier and Wim and all kind of others very happy as the accountants. They need to do the work that and you determine as a company how many hours the auditor is going to write on this. Because if you are going to have good controls in place that are similar to your financial controls, you can really lean on that. And that is, I think, what I would like to say on the group reporting. So it is complex. Environmental reporting requires specific tools that don't contain all the data that you have, for example, on gender and what have you. Health and safety information, learning information, and then also when it comes to business ethics, that's again a different ballgame where many companies have got different systems to capture the whistleblowing information that you need to have. So the whole breadth of all of this is very significant, and that makes it a little bit more challenging than just financial reporting, I think.
Good, thank you, Simon. And let us be clear. This is first and foremost, as I already said, it's about the transition. It's not just about the reporting and the assurance and to focus on that. So I think we should be clear on this. We have a few other questions, and Tom, I will also come to you in a while, but first I would like to go to Chiara, which has a very popular question here, and it is about, sub-teams, and, when a sub-team is judged to be material, then the question is the whole team judged to be material, and should it therefore be taken into account in the reporting? So the floor is yours, Chiara, for that one.
Thank you for this question. So once a subtopic is material, you need to open the standard that correspond to that subtopic. So you need to get familiar with that standard. However, there is a level of flexibility in the way you report, because when you describe your policies, actions, and targets, and also the aspects of your governance and strategy, if applicable, you will focus what you have in place. So if only a subtopic is material, pollution in air instead of pollution in water, for example, you will only cover the policies, actions, and targets, the aspects that are related to the pollution in air that is material for you. Same thing then when you move to the metrics part of the standard, the metrics can be omitted when they are judged to be not material, either entirely disclosure requirement or a data point can be omitted. So also in that case, there is flexibility to reflect what is only material for you.
Good, thank you. Tom, can I come to you? Because we all know that the publication of the ESRS in the official journal is imminent, and there is the question on the translation of them. So anything you can share on us, what we should expect when? Thank you.
Thank you, Hilda. So the publication of the texts in the official journal should take place, what are we now, the 12th of December? It should take place within the next 10 days. What is published will be effectively unedited and uncorrected compared to what was published by the Commission at the end of July. There may be some small nuances to that, some minor typos taken from the English original and so on may be corrected, but broadly speaking, any possible corrections to translated versions will only come afterwards through a separate correcting procedure that we will run as soon as we are able to early next year. So to manage expectations, broadly speaking, what people will see published in the official journal is what was adopted in July, but there is some scope for working on corrections early next year.
Good, thank you. So it means watch this space as far as official journal publications somewhere next year. Wim, I would also like to come to you because we also have quite some questions on, the sustainability assurance standard and the IASB standard that actually was up for comments to the very beginning of December. So people are asking, what are the views of the profession on this? Will it be useful also in Europe for the assurance providers to give assurance on the ESRS? So just a few comments from you on that would be great. Thank you.
Yeah, sure. First of all, the standard is of course a global one, not directly applicable to the ESRS and not designed for the ESRS, but also applicable, I would say, to information in the EU. But across the world, you have many other ESG type of reports with assurance. Some of them relate to carbon, for example, in specific. I think where we are as a profession and coming from ISAE 3000, that all accountants listening into this webinar will recognize, that standard was not so specific on what you could do or what you should do, but provided more the general aspects of an engagement. ISA 5000 will be much more specific, I think, and importantly also distinguish between a limited assurance and reasonable assurance. And if you ask auditors about some of the challenges for assurance, a main one is, what is the difference between limited and reasonable? How far should I go in each in each level of assurance? And I think the standard will really help there to provide further. I'm trying to avoid the word, but I can't find a better one. Further guidance on what we as auditors should look after. And in the consultation that was held in Brussels recently, amongst others, we also spoke about limited and reasonable assurance on the materiality assessment to provide further insights on that. If we have that, then I think it can serve as a good basis. It is not a working program, of course. It is not, again, specifying what you exactly have to do, not a checklist, but I think it will really help. And we have, of course, to see and hope that the EU will also adopt that standard. As many of us will know, the EU is due to issue its own assurance standards by 2026. If societally we are smart, we take the ISA 5000 and don't invent our own. But yeah, we have, of course, to see whether that is acceptable to the EU. For auditors, again, I think it is a very helpful step forward, I would say.
Thank you, Wim. Before we round off, and that will be your one suggestion for stakeholders on the implementation of the ESRS, can be one word or one sentence, but not more. But before that, I would like to go back to Chiara, and it's, what is next for EFRAG? Tom has already given some information on that. Patrick has talked a little bit about this, but as far as timeline, people are asking about sector-specific standards, next guidance. Anything else that you could say on that for our audience? Chiara, I am afraid.
Yes, can you hear me?
Here you're back. Very good. Go ahead.
Sorry, which was your question?
Anything next
yes.
from EFRAG, which has not yet already been referred to by Tom or by Patrick?
Our work program, which also includes the taxonomy and the SMEs, have been mentioned by Tom, but we are also going to work on sector standards with the idea of issuing the first batch of exposure drafts at the end of 24, at the latest beginning of 25. So and of course, other implementation guidance will also be issued. In terms of recommendation, what I can say is to stay in touch with us, to follow us, to engage, to send us implementation questions. We are very, very open and keen to contribute as much as we can.
Good. So thank you very much, Chiara. So for the other panelists, your one word or one line suggestion for our stakeholders for implementation of the ESRS. Can I come first to Simon?
Yeah. Well, I'm not going to say one word or one line.
You're on mute, Simon.
Am I still muted? You cannot hear me?
Go ahead.
Okay. So I will not do this in one word, but basically I said over and over that we should remain pragmatic. We look at the purpose really of all of this rather than the means to get there. But what I try to convey, for talking from experience, this is a massive effort. So please, do not think it will come. It is here already. And there's a sense of urgency needed. Start with your double materiality assessment and subsequently do your gap assessment and involve the number of people that you need to involve in your company after you obtain board level support. Thank you so much. Did you hear me, Hilde?
Good.
Yeah, thank you.
Thank you, Simon. Olivier?
Probably I will reiterate what has already been said, on which I said at the beginning, but I think we keep we should keep in mind that the ultimate objective is the transition, and the rest is about transparency and tools to achieve that objective of transition and transformation.
Thank you, Olivier. And finally, Wim.
Yes, thanks. I would say, first of all, take reporting serious as an instrument for the transition that Olivier referred to. Secondly, related to this, accept the current level of maturity, and we know that that is relatively immature because it's new. And then thirdly, work together and contribute to a real improvement of reporting. Anything you can add there to drive real progress for a sustainable economy. That would be my one suggestion.
Thank you, Wim. And I would like to thank all 4 panelists. Many thanks for your insights. And because time is running, I would like to go back to Mark to close and wrap up. Thank you, Mark.
Yeah, thank you very much, Hilde. I think we had a very rich and fascinating discussion in the past 2 hours, starting with Tom and Patrick to give us the framework and the overview of what's on the agenda of the European Commission for the next few years, and also what's on the agenda for EFRAG at the moment that Patrick covered so well. And I think in the panel we got a lot of practical advice actually. And I think the common theme here that a journey we have to be put, but we have to take it seriously, and it's a means to end. I think that is it's a new and there's a higher goal we want to achieve. It's a perfect on day. I think the collaboration between all of us, right? It's not that you give the implementation. Barriers that need to really start with the work and raising the questions. And from my and others that also accompanying on the G and keep it pragmatic. Don't go into a tick the box exercise is very important. The only stakeholder I have heard mentioning is later. I think it's important we have also with regulators and that is a journey. Clearly, if we're finishing a case, it's called that, but we need to have room for where best efforts are being made. I think that's the I heard from this. So I think that is for the 3 that I would like to thank. I'm not sure people hear me. I hope they can. But I want to thank all speakers today. I would like to thank Tom Dot, and analysts Chiara Del Prete, Simon Braga, Wim Bouts, Olivier Scherrer for contribution today, and Hilde for the rate. Hilde, please take over because I'm breaking. Mute.
Hilde?
You're on mute, Hilde.
Hilde, you're on mute, but we could not hear Mark too well. He was breaking off from time to time, but he had some nice conclusions. Maybe this can be shared with the people who were in the webinar.
Well, yes, thank you, everybody. We will make sure to share Mark's conclusions in a written way. I think his main notes were on collaboration and summarizing what we heard from this very useful panel and everybody that was part of this event. So thank you very much to all our speakers and everybody who joined us today. We hope and look forward to seeing EFRAG's guidance, and we see you soon, and happy holidays to everybody. Have a nice rest of the day.